What's good, everybody? Wendell here from Spektrades, and today we'll be going over the ICT power of 3. For the power of 3, we have 3 phases. Some of the key principles for the 3 phases are the accumulation phase, the manipulation phase, and then the distribution phase. For the accumulation phase, price will consolidate in a tight range. Second, retail traders often place stop orders above and below the range, and smart money position themselves quietly to use this accumulation phase to go to the second phase, which is the manipulation phase. For the manipulation phase, the market creates a false breakout or breakdown to grab liquidity. Retail traders are lured into bad positions chasing the move. The distribution phase is the last phase. This is where the true move begins, leaving retail traders stuck on the wrong side. As we can see here, this is just a brief schematic right here in a chart overview of the power of 3. So for the schematic right here, this is the first phase where price will consolidate in a tight range and build up liquidity. Then we'll see that price will rally higher and give us a manipulation of the old high if we're looking for price to go down, or a manipulation of the low if we're looking for price to go higher. Just like we see here, price was consolidating, building liquidity inside of this range. Then we see this strong candlestick purge higher to clear this old high right here and give us a liquidity sweep of this accumulation. Then we can see that price violently push down lower to give us a breaker structure of this old low to pull back and use this 5-minute breaker block to then distribute lower. So we have accumulation, manipulation, and then distribution. Some bullet points is that the power of 3 happens across all time frames, but is most powerful on the 4-hour and daily charts. Is the foundation for identifying institutional activity. Recognizing this sequence can prevent you from falling for traps and help you trade alongside smart money. As we can see here, the power of 3 is one of the best high win rate strategies. If you position yourself correctly to watch the accumulation and then wait for that manipulation to happen and then catch this distribution move, you will make a lot of money. Will do great for your trading. Now let's go over the anatomy of the phases, some key characteristics. Right here is the 3 phases again: accumulation, manipulation, and our distribution move. Now let's go over the phase breakdown. For our accumulation, it occurs after a significant trend or before news event. So as we can see here, if price was rallying higher strongly, that's when, after price rallies higher strongly, then we can start seeing this accumulation build. Or if we see price distribute lower strongly, as we can see here, this is when we'll start seeing this accumulation game build. It often occurs, just like I stated right here, it often occurs after a significant trend or right before news events. The volume is super low. It seems like it's boring, right? Because there's no momentum, right? It's just moving in sideways. It's sticking inside of this box right here before we get the second move, which is our manipulation. Smart money collects orders without tipping off their intentions. One of the key tips is to identify consolidation zones on the 1-hour or 4-hour chart. The second phase is the manipulation phase. That's where a sharp spike in price goes up or down to grab liquidity. As we see here, price was building liquidity right here, and then we see this strong wick pull higher, right? This is what we call a manipulation, where price is strongly pushed higher and then rejects lower. So price accumulated, strongly pushed higher with a strong spike to then push down lower and rejects. That's our manipulation. It's short spike that goes up or down to grab liquidity. It commonly occurs during high impact news or at key session opens. It triggers stop losses and activates retail orders. A key tip is look for wicks beyond consolidation's highs or lows. As you can see here, after we see price violently push up higher and then rejects, this signifies our second move, our manipulation. That's when we can start positioning ourselves to catch the beautiful move right here, the perfect move, which is the distribution move. Now for the number 3 is our distribution. The real move occurs, breaking out of the manipulated range and then continuing the trend in the direction of smart money. As you can see here, price will accumulate first and then manipulate second to then distribute later, right? That's when we want to wait for that distribution. We don't want to get involved in the accumulation or the manipulation. We want to get involved inside of this distribution because this is where smart money is in. This is where the volatile price movements happen, is inside of this distribution move. An institutional insight is that these phases are designed to manipulate retail emotions such as fear, and greed. That's why price accumulates, manipulates, and distributes. It's literally trying to trick you. Price sticks inside of this accumulation range, force you to act impatiently and take the wrong setup. That's why when price is accumulating, we do not take any trades. Or when price rallies higher and give us a strong wick, we do not take any trades. We wait for price to give us a clean displacement lower and then a pullback to a zone, then we can distribute perfectly. Avoiding trading in the manipulation phase and wait for the distribution to unfold. Just like I stated, we don't want to get involved in the accumulation or the manipulation. What we want to get involved in is the distribution phase. After price rallies higher and give us a liquidity sweep on this push down lower, that's when we want to get involved. Now for the execution blueprint, applying the power of three. This is the step-by-step on how we use the power of three. First, we mark the accumulation zone. Find areas of consolidations on the higher time frames, such as the 4-hour and the daily. You can add the 1 hour also if you are a scalper. Note liquidity above and below the range. As we can see here, price will consolidate inside of this range right here. Liquidity is being built below and above this range right here. So as we can see, price pushed down lower to clear the below liquidity and then rally higher to give us a market structure shift. So price was once in a downtrend, but now it's looking to go higher in a uptrend. Identify the manipulation. Wait for price to sweep liquidity. Look for long wicks or sudden spikes beyond the range. As we can see here, price purged down lower and wicked down here. As we can see, price purged down lower and wicked down here to push up higher and give us a firm body breakup structure of this old high right here. This is our market structure shift, signifying that this was just merely a liquidity sweep. Price did not want to push down lower here. It just went down here to grab liquidity to push higher to continuing this trend. Enter during the distribution. Confirm the move with a market structure shift. Use the 15-minute or the 1 hour charts for precision entry. As you can see here, after our market structure shift, price left us this fair value gap. Price tapped inside of this fair value gap once, but it did not mitigate the 50%. So this fair value gap was still valid. So after price give us this market structure shift, we can see that price pushed down lower, clears this entry range low, tap inside of our 50% of our fair value gap to then rally higher. So we see that first price accumulated orders and then push down lower and give us a liquidity sweep to then push up higher to clear old highs and reach our target. An example entry is that our stop loss remains below the manipulation candle. As we can see here, our stop loss is below the low right here. You can either place your stop loss at the wick low or the body low. Me personally, I really use the body low because if price violates the body low, this is just a bad trade for me and I just walk away from it. And then where we target is our liquidity pools or opposing zones. So as you can see, after price mitigate our fair value gap, all we're looking for is opposing zones. So we may have a buy side high right here or another type of liquidity pool. This is where we're going to target. A bonus tip is to combine the power of three with order blocks or imbalance zones for added confluence. And also be patient. This sequence often unfolds over several sessions. As you can see here, the accumulation phase usually happens around Asian session. And then the manipulation phase usually happens around London session. And then it's during New York session, me personally, that's when I may see this distribution move happen. And just like I stated, we add order blocks and imbalances as added confluence. So we have this fair value gap right here as an imbalance. We know that price will pull back to mitigate the 50%. So this right here works as precision for us to get a snapper entry to then target opposing sides of liquidity. Now let's go on the charts and do a top-down analysis on how we use the power of three. If you're interested in a free Discord where me and my brother Arkham Trades share daily analysis and have a free sport course where we share trading lessons and trading studies and models. And we also have trading resources like ebooks, our Spark journal, and PDFs of every video that we have. And as you can see right here, traders inside of the Spark Trading U community catching trades with the premium and discount model. As you can see right here, catching this much amount of pips with our premium and discount model. If you guys are interested in joining the Spark Trading community, it is free. Click the first link down below in the description and join the Spark Trading community. Now that we're on the charts, we're currently on GBUSD on the 4-hour time frames. As you can see, we are currently in this uptrend. Price is creating higher highs and higher lows and giving us consistent breakup structures of prior old highs right here. So this confirms our higher time frame bias right here that we are currently in a uptrend. Then we can see that price pushed down lower and give us a liquidity sweep of these old lows and mitigate this 4-hour fair value gap. And now we see price starting rallying higher. This right here is just too tight. You can't really make sense of this right here. That's why we scale down to the 15-minute time frames. And now on the 15-minute time frames, now we can see more price action. Now what we can notice, as you can see, price has just been playing inside of this range. This right here is our strong low. So now this becomes our weak high. As we can see right here, more in orange is our Asian range. Like I stated, right, the Asian range is usually the range that builds the liquidity. Usually the range that goes and give us our manipulation phase. So we can see now on the 15-minute time frames, the Asian range was just staying inside of this range right here, inside of this box. Then we can see that price violently push down lower during the London session. Just like I stated, right, the London session is the session that we usually see the manipulation happen. This is a clear manipulation. Price pushed down lower during the London session to manipulate these old lows right here violently. It tricked a lot of traders into thinking that price was gonna go short to come and clear this old low and this old low. But after price manipulate this old low right here on the lower time frames, we have a lower time frame market structure shift. Now we know that this is our accumulation, manipulation. This is the second phase. And what are we looking for after? We want to see price pull back inside of a zone, either this fair value gap like we stated, or a order block to then rally higher to go to opposing sides of liquidity. So we can target either this old high or also this old high right here. Me personally, I'm going to use this fair value gap right here. It's going to be my entry. Target the 50% of this fair value gap right here. Stop loss right at these old lows. Just like I stated, right? Stop loss right at these old lows. We targeting the 50% and we're hitting the old high right here. This is our old range high. As you can see, this is where the range started. It started from this old high right here, pushed down lower, tap inside of our 4-hour fair value gap, and then we just been playing inside of this range. Then we see that price push down lower, give us a manipulation of these old lows and this old low right here to now rally higher. So price was accumulating orders, and during the Asian session also accumulating orders. For price push down lower, give us this manipulation, and now we're seeing price rally. Now let's play price to see if we can get this entry. So we can see price pull back inside of that 50%, retest that same fair value gap, and boom, for price to come and clear our range high. But this right here is just how our power of 3 works. It's one of the most powerful trading strategies. First, we want to see price tap inside of a higher time frame zone and get the higher time frame trend. We know that price wants to go higher. We are currently in a higher time frame bullish trend. Then after price taps inside of this higher time frame zone, we wait for a lower time frame market structure shift. After this lower time frame market structure shift, we know that price was once in a downtrend, but now it's looking to go higher in a uptrend. Then we position ourselves correctly and wait for the 3 phases to happen. We wait for the accumulation, then we wait for the manipulation of old lows or old highs, and then on that distribution move, we wait for a pullback to catch that sniper entry to then target opposing side of liquidity. I've also created a free course and a free trading community. If you guys want access to that, make sure you guys click the first link down below and join the Spark Trading community. Well, this is it. Make sure you guys like, comment, and subscribe. Spektrades out.